So I kind of wanted to get you thinking about what the impact of stablecoins is to the crypto economy. There are certain advantages of having a stablecoin. If the coin truly is equal to $1, stablecoins can be moved anywhere in the world. They can be deposited into exchanges on a weekend or a holiday or an evening, anytime the banks aren't open. So there are plenty of advantages of having a stable coin, but it's kind of an unusual. It's just kind of a weird concept. There are a couple of economic problems with stable coins that I kind of want to just talk out. I'm not trying to have everybody choose a side or whatever, but there is a reason why CoinBook doesn't necessarily support stablecoins. The main one is the trust issue, because as we've all seen with the corruption of Bitfinex and Tether and that whole thing, there's value that people assume exists, but it is not necessarily actually in existence. So let's talk about how the economics of a stablecoin work. Let's say you and I get together and we invent a stablecoin, and we get investors to give us $1 million in exchange for 1 million stable coins. All right? So you have 1 million stablecoin to go out and buy Bitcoin or other things. So you've retained your $1 million worth of purchasing power. But as the creator of the stablecoin, where is that original $1 million? It's sitting in my bank account. So I have given you the ability to spend $1 million, and I retain the ability to spend $1 million. Do you see what happened? Being the creator of a stablecoin is a sweet place to be. How much did it cost me to manufacture 1 million stablecoins? Nothing. Nothing at all. It was a blockchain creation. I set the number, bam, $1 million instantly created. Oh, but those $1 million are worth $1 million because there's $1 million backing them up, right? Yes. So if you redeem your tokens, your stable coins for the $1 million that I have, then everything's a wash, right? Well, in the meantime, time is money. And there is an advantage of me having $1 million in my bank account, sitting there earning interest and giving me opportunities to invest. Because believe me, putting $1 million under the mattress so that you can use a stable coin out there in the market is not very sound finance. It's just not. So you can take it to the bank that the person that is releasing that stable coin or has created that stable coin, they're going to use that $1 million for something. If they're 100% honest, they'll still try to earn interest on it or something like that. But what you've done is you have doubled the inflation rate of that $1 million. You've taken $1 million and you have created $2 million worth of purchasing power. And what are the effects of that on the economy? Well, in the crypto economy, it boosts crypto because what are you gonna do with your stable coin? You're most likely gonna buy crypto with it, right? So that increases buying pressure on Bitcoin or other coins, so the price will go up. If I'm investing, if I'm investing and I'm wise, I would use like a risk-free rate or something and use short-term government T-bills or something like that. But if you're Bitfinex, what are you going to do with that $1 million? You're going to buy Bitcoin with it. So you've essentially created a teeter-totter, which adds to the instability of Bitcoin. So you've essentially taken $1 million to buy $2 million worth of Bitcoin. And what happens when the stablecoin comes due? You got to sell your Bitcoin to have the $1 million to give to the guy that just sold his Bitcoin in the stablecoin. So it becomes a very volatile situation. Prices are going up twice as fast and they're going down twice as fast. So I just want you to think about these types of things. You know, stable coins there are advantages, but there are disadvantages also. And it can create even more instability in the industry than there already is, because there's plenty of volatility in Bitcoin. But at CoinBook, we try to just be on the level. We're going to use dollars, and we let you buy and we let you sell, and the prices and markets move as they will. We're not trying to get anything extra out of it or pretend to do anything different. So that's just our take. It's just part of our philosophy of trying to be open and transparent with what we are trying to do here at CoinBook. So I hope that helps.